Today I'm going to talk about the ideal ingredient that is required in a long-term investor's strategy when obviously looking to invest in the stock market, but this certainly could be transferred across other forms of investments or even life when you invest in yourself in that regard. Now, this is actually to do with something that you likely hadn't considered. So some of these points here you might not have thought actually could relate to investing as positively as they do. And hopefully from this video you'll take something, and if you do, please drop one of these to help beat that YouTube algorithm, as it is much appreciated. So if you discover something new or something you hadn't thought of before that helps you, then do click that like button for me. It is much appreciated. So this ingredient, you might think, is it the first rule of investing? Don't lose money. Second rule? Follow rule 1? No. This is actually to do with your mental health. And this is critical, absolutely critical when investing. Because after all, with good mental health, you're going to have a lot clearer thinking, and therefore you're going to fall less likely to fall for obviously some of the traps involved in the psychological or behavioral aspects of investing in the stock market. And this is really leading to the point of mastering emotional control, something that I personally believe is what I'm quite good at. This is where I'm able to remain very almost stoic in this regard and see my stocks drop by 60, 70, 80% and remain very calculated and cold. I think every individual can achieve this. Some it may be more difficult for, but when you put into play these steps, then you certainly could master emotional control as well. But I must be very, very clear. At the moment, my investment portfolio is down 50%, and this is not financial advice. And obviously, yes, my portfolio is down 50%, so you might go, okay, well, how does that help? How does that help with a strategy? And it might not for you. But then we might look back on this in 5 years' time, and that portfolio, due to my strong emotional control over this time, may be a lot higher than it is now. So certainly don't disregard these tips. Now, the first one is absolutely avoid the stock chat rooms. Now, if you've gone to like the London Stock Exchange chat room, or London Southeast, or you've gone to ADVFN and you're sat in those chat rooms for any period of time, you're a fucking idiot. Do not go into these groups because they are toxic and honestly terrible for your health. The knowledge in these groups can sometimes be useful, but it's full of the same crowd. These people sit in the group and they go, oh, I love this stock's amazing. Oh, how dare you say that this stock is got one negative about it. No, let's all hate him and let's all bully him. I've actually had a situation where I've managed to wind up the whole page of an investment. Now, if you remember that is a throwback, but I was actually talking about GGP, or Greatland Gold. I called it a pretty bad investment and I wouldn't put that much money in it, and since it's down about 72%, and obviously they actually couldn't really attack me, so they tried obviously saying stuff online. Avoid these groups whatsoever. Like, if you're sat in there like a chump and you're going, oh yeah, I'm just going to message these people that you don't know who they are and talk about this stock, then it's pointless. Don't do that, because you can fall very victim to herd mentality and you'll likely just follow whoever's talking the most in there. After all, would you really trust these people when at the end of the day they're just names on a screen? You don't know who they are, you don't know what their lifestyle is, you don't know what their agenda is, so why on earth listen to some fucking idiot in a chat room? Avoid it. Now, exercise. Now, this might not have come to your mind. You would have thought, what on a stock market channel or an investment content creator, why would I be talking about exercise? How is that possibly useful? Well, exercise is actually critical for the mind in developing your mental health. As a guy, if you go to the gym and you lift a bunch of heavy shit, I'm talking heavy weights, not obviously to absolutely destroy yourself, but to a point where you've lifted heavy enough weights that you do feel tired at the end of it, you will care less about what's going on in the stock market. You'll care less about the overall media. Oh wow, look, RPI is at this rating, CPI, inflation's high. You're going to care less about it. But that doesn't mean obviously that you just completely ignore it, but you become a lot more level-headed and focused. And this is critical. The same can also be applied for other forms of exercise other than weightlifting, but certainly as a male, I think weightlifting is the most important because it's got almost more benefits than you may think, because obviously as you're lifting these weights, as you see yourself progressively lifting heavier things, or perhaps seeing it physically reflect in your shape and form of your body, you're going to feel better about yourself. And overall, if you're feeling better about yourself, you're likely going to have one less negative to draw down upon and something that might help you when investing in the stock market. I've personally found it very, very useful. So when I would go to the gym, I'd lift a bunch of heavy weights, or at least relative to my body weight, obviously, and I would then leave the gym and I would come out completely focused. Very, very stoic, very focused, and I'm able to think about things very clearly. This means I don't have a biased agenda to either the positive or the negative sides of the spectrum. I'm aware of each side of the factors, but I'm able with a level head to decide, okay, is this something I'm interested in, or perhaps was I falling hype? There is certainly a degree or something that you should really look into, and if you're not exercising anyway, like you really should be. Like if you're sat on your arse on a chair just staring at your computer all day, that is probably a contributor to some form of depression. Avoid it. Now you might go, what is this 22-year-old telling me? I've done this for 53 years. I don't care about exercise. Then honestly, do your own thing. But trust me, you start doing that and you get that in your routine, you feel a lot better about yourself and other things. Now, the next step is only invest what you can afford to lose and you do not need in any short period of time. And when I say short period of time, in less than 5 or 10 years. This is something that is, again, a very important factor, because if you're investing money you're going to need at some point in the near-term future, you're going to be worrying a lot about the stocks going up and down, and you're going to be incentivized to trade more. And we've seen, obviously, from statistics that the more you trade, the more likely you are to actually end up losing money, as 78% of day traders end up losing money, so it's just not worthwhile. Whereas we've seen the average annual return of the stock market, or at least the S&P 500, over a 30-year period is 8%. You might as well stick to it. And in fact, the best performing investors were those that were actually dead. So the ones that obviously weren't making any trades, obviously, because people hadn't realized it actually died, and therefore actually they had seen the greatest level of returns on their investments. And this also falls into the idea of watching the share prices move. If you're sat on your phone every single minute, or like every 5 minutes going, oh, I wonder how much my share is up. Oh, it's up 2 pence. Oh, wow, now it's up 2.1 pence. It's a waste of time. You're just incentivizing yourself to look at it more, and you're rewarding yourself with probably dopamine, as obviously you're looking at it, seeing it go up. You get that little reward path in your head, and you feel a little bit better. That chemical balance. It's probably the equivalent, really, of going out and having a smoke. Like, really, if you see your share up slightly, you're going to feel great. And you've got to avoid that. You've got to avoid looking at the share prices daily, because I think anyone can fall victim to this. If you avoid looking at the share prices daily, it doesn't matter if it's up or if it's down, because quite frankly, you're not looking. Therefore, you're not worried about it. Ignorance is bliss in this situation, in my opinion. Now, well, relating to this one, you need to understand that the share price is just what the current buy or offer is for the shares of the stock. If someone was stood outside your house going, you know what, I'll pay you £300,000 for it, and you felt at the time actually it was valued at £250,000, you'd be like, okay, yeah, that's quite nice, I like that, cool. But you're not going to sell it because you live in that house. This same person comes up the next day and says, you know what, I'm going to offer you £250,000 for your house. You're going to be going, wait, why is it less? But that's okay, it's the fundamental value, that's fine. I'm not going to sell it because I still live in this goddamn house. It's going to happen again. And he's going to go, you know what, look, I'll offer you £175,000 for the house. And then suddenly these individuals start to panic. They go, why has it dropped so much now? It's going to continue to drop. They panic and then go, well, I've got to sell, I've got to move quick. Whereas that's absolutely not what you should be doing. Like, and if you obviously knew in your mind, okay, actually, I knew the underlying value of my house, it's probably around about £250,000. It doesn't matter because I still live in this house, then it obviously wouldn't impact you. But it's different when you hold share certificates in a company, obviously. But if you act as if holding these shares means you own the business, imagine that you've bought the business outright. I think this is also another way of going, okay, why would you sell this business outright if obviously it's making good money at the moment? It's clearly just short-term fear. If you see the value of your portfolio going up and down, and this is a concern for you, then diversification is absolutely key. In my opinion, I'm not bothered about the volatility of share prices. My portfolio right now could drop to zero, and what I would chalk up from it is a very valuable learning experience. However, I understand that as your wealth accumulates and as your investment time horizon perhaps lessens over time, as you potentially are going to retire at a sooner age, you're going to be a little bit more bothered about this. So it's very important to therefore diversify your strategy or your investments anyway, so that if one aspect of your investments falls, at least the others may hold their value or fall less. Now, diversification is a great form of reducing systematic risk, and obviously the more stocks you hold or the more funds you hold, obviously you're more likely to conform to the average annual returns, but you're also less likely to get wiped out by obviously one stock doing absolutely poorly. Again, something that I don't follow myself, and that's likely the attribution or the main contribution to my negative drawdown in my portfolio, where I'm down over 50%, just because I only hold two stocks at the moment. One of them's down about 60%, the other one's down about 30%, and then the third stock I held, I sold at a 50% loss, although that's dropped considerably more since I've sold that. Argo Blockchain, I sold at 94 pence a share. Go have a look at that to see where that one is at the moment. Easy to understand investments are also very, very valuable, because if it's easy to understand, you see the share price going up, you go, okay, well, this is why. You go, okay, right, look, this business, it's selling ice cream. The share price has gone up over the last 3 months by 4 or 5%. It's likely because it's now summertime. It's likely because their results are anticipated to be good. They're going to be selling more ice cream. That makes sense. You can therefore continue to think with logic and go, okay, that's why it's up. Or you might go, oh, well, these results are bad. Again, it's winter time. Ice cream is probably not as popular. Perhaps a seasonal variation, meaning that actually they underperformed slightly during the winter compared to their usual quarterly trading. That's fine. You might go, well, actually, this is because one of their distribution centers or factories was shut down. And you know that. Easy to understand investment, something that you can easily understand. A business model means that you're easily able to identify any problems or what they may do. So if you hear that a warehouse is down, you'll go, okay, well, yeah, this is obviously going to impact their overall capacity, or perhaps if they've got less storage for their inventory, this could be a concern. They may have to sell, exactly that. It's understanding what's going on in the business is key. And it allows you to keep a level head. If you don't know what's going on in your investment, you're going to be so fixated on the share price moving up and down that therefore you're going to be wondering, well, the share price is up 10%. What's changed? Whereas in reality, you'll know that if you obviously weren't investing on a share price only. Meditation is also, I think, probably the most important. And this is really fantastic for your mental health. Again, you've probably sat there going, I've never meditated in my life. I've been working most of my life. I'm fine. But when you actually sit down to do it and realize the benefits that it actually has, I've honestly benefited a lot from it. I've shut myself in a room and said, look, right, this is something that is ongoing at the moment. This is a concern. Clearly, this is not going the direction I want it to do. I'm not going to touch any of my technology, no electronics. I'm going to sit there. Or I'm going to go for a walk, not talk to anyone, just be antisocial, right? Put all your electronics away. Don't even look at it. Just completely remove yourself from anything or any distractions around you, any external influences, and go, okay, look, this is the problem. I'm going to think about it. And I've done this actually with Boohoo. When they've had one of their negative trading updates, I think this was about 6 or 9 months ago now, I was like, okay, look, this trading update was worse than I thought it would be. Let me dive into it. Okay, right, so the revolving credit facility is available. Yes, they're going to be moving into net debt. Was this anticipated? Well, no, I thought their trade would be a little bit better, etc. Although this is industry-wide, and it just allowed me to really take the time to think it through. I gave myself half an hour, I just walked. I kept walking until by the end of that walk, I knew that I came up with a decision. And at that point, it was to continue buying this stock. And it's just by doing that, you allow yourself the time to process. Whereas a lot of people are on their gadgets all the time, they're so distracted that they never get the time to actually think about some of the issues or problems in their life, or even reflect on things that they've done, so they don't learn from it. And they continue to make that same fucking mistake. It's such an easy thing to do as well, just to walk off, go for a walk at lunchtime on your break at work, eat your food obviously beforehand, then go for a walk. No distractions, and you'll honestly find it so goddamn useful. Oh, the voice crack again. Remember, a balanced mind is key. Everything is good in moderation. When you use moderation to your advantage and try to keep things balanced, and you don't focus on the negatives or you don't focus too much on the positives, I think ultimately that allows you to master emotional control. It's like if you were thinking about your mental health, and you're constantly fixated on the negative things going on about in your life, and you're focusing on them, obviously overall as a person, you're going to be more negative, are you not? Whereas if you're focusing about the good things, you're happy because you've achieved this. Oh, look, guess what? You've gone and done this. You're happy, right? Oh, maybe you're so excited because you've gone down the club and you've got off with a girl and you're an absolute virgin, right? Just an example, right? And you're chuffed about that. You're like, yes, you know what? Get in there, boys. Again, that's just a random example, right? And perhaps it relates to me, you never know. But this, I really digress here. This is key. Maintaining that balance allows you to really evaluate everything and develop that emotional control. Balance is a very easy concept in hindsight. And obviously it takes years of conditioning. You need to condition your mind to be like this. It's almost like being quite like a monk, remaining disciplined and understanding, but avoid dwelling on these negatives or positives. Be aware of them, but don't always think about them, because the more you shine light on them, the more obviously you're going to worry about it, and it's likely going to add to your stress levels as well. And this is exactly why I don't look at the media. I don't touch it other than business news, and I only get that from Hargreaves Lansdown Sharecast, because they don't add any political agenda or anything extra. It's just the facts, the figures, exactly what I need, and then I can make my own interpretations based on the data available. Some people obviously like to read the media for the excitement, for the entertainment, and my thoughts on that is find something better to do. Don't go on Twitter and go whine about politics, because quite frankly, what are you doing with your life? Deal with your own problems first, then worry about what's going on with the government. Peace out.